Good morning, gang. Good morning, Safia. Nice to see you in here this morning. How's everybody doing today? Hope everybody had a great weekend. Relaxed a little bit, rested your brains, did something fun for yourself, I hope. It is Monday. Good morning, Mike M. Nice to see you. Guys, we're going to have some fun today. I'm excited. Excited about the week. Good morning, K-Pops. You sound like a breakfast cereal. I like it. I was thinking that the other day. Didn't say it. Get a big bowl of K-Pops in the morning. Fruit and flake. Right on. All right, guys. It is early on a Monday morning, 9 a.m. on the east side, only 6 a.m. here where I'm sitting. Let's get to work. Good morning, Ziba. Nice to see you. Guys, we're going to do what we did yesterday. Well, not yesterday. Yesterday was Sunday. We're going to do what we did on Friday and Thursday, and we're going to keep doing, right? We're going to keep doing until it's easy. That's the plan. Every morning, as my charts open, I know you guys do this too for the most part, but if you don't, let's get in the habit. Whoops. Forexfactory.com/calendar, guys. This is my first stop when my charts are loading because I want to make sure that I'm not trading into news. And it really isn't the news itself that I'm worried about. It's the emotional response that may come from it. If you were watching at 8:30 a.m., I was looking at the NASDAQ and it spiked pretty good. It went straight from support all the way to resistance with no opportunities because it happened fast. So I'm always looking. Is there a high impact? Is there a medium impact? Something coming out that could make that market bounce, maybe go a little bit out of sorts. And if there is, I'm just going to sit on my hands. I'm going to go reload a cup of coffee, have a piece of French toast. I don't know, whatever. Anything other than trading. And then, of course, everything that we talk about, guys, comes from the Nexgen T3.com education page. This is your one-stop shopping. If you need NinjaTrader help, maybe you're brand new to NinjaTrader, you're getting into the software, first time running NinjaTrader. If you click on the user guide, this is kind of your NinjaTrader how to connect, how to open a workspace, how to scale your charts, how to take pictures, and pictures are such an important part of what we do. Make sure that you're comfortable with that. If you're brand new to Nexgen, you just got here, Rakesh, welcome to the room. I recognize a new name there. If you need some help taking pictures today, guys, I want you to let me know. It's a simple process. TechSmith Capture was downloaded onto your computer when you downloaded the software, and if you open it up, it's going to take just a second to open up. It's just a click and drag kind of tool. Let me bring mine over here, guys. This is what Capture software looks like. It's a super easy program. And I'm going to give you the link to the how-tos, how to take those pictures, how to share in class. If you need help, please raise your hand. I will stop everything in its tracks to talk about taking pictures, sharing pictures, because that's how we're going to have a conversation. Also in the user guide, how to connect, right? How to set up stops and targets, how to apply chart templates, market flow. Some of you guys like to change the way things look, totally cool. Adding or changing synthetic triggers, Fibonacci lines. So all of this is available to you right off of the education page, right here in the software user guide. And I always encourage new users, go through, do a little clicking, try and knock your charts out of sorts, make sure that you can bring them back, practice with your ATM strategies. That's just kind of basic functionality as you learn to use the software. And then as you learn to use the software, everything that I talk about comes from the tutorial section. And I mean everything. There are no secrets with Nexgen. And the whole idea is that you can find whatever you need at one click. If we're talking about rules, they're all going to be in line for you. If we're talking about management, market flow volume analysis, adding more trades to what you're doing, there's a whole video library. There's a section dedicated to the psychology of trading. Everything that you need is made available. And then my job is to teach you to read these indicators, guys, and I absolutely love my job. But one thing that I know for sure is that when you're learning the next gen indicators, when you're getting here, allow yourself to be new. And I say that a lot. And I say allow because most of us don't want to let ourselves be new. Most of us put a lot of pressure on ourselves to be perfect right from the get-go. I want you to understand that the software is learnable, and it's not something that has to take a long time, but the more streamlined you keep your focus, the more you embrace the idea that simplicity is key, the easier this path will be for you. I promise. We're going to talk about a high probability trend trade for the first hour in this class. We're going to talk about the rules. We're going to look at the looks. We're going to understand how to study it. And a high probability trend trade is defined as when each indicator on every chart agrees for the trade. And typically, this is when your triggers are the strongest, and we're going to learn how to identify those strong triggers. No termination conditions exist, and there's room between your entry and your target. And guys, your high probability trend trade, if you are brand new to Nexgen, or maybe even if you're coming back to Nexgen, or you took a break, or maybe you tried to do it your way and you're not getting the results that you wanted, the simplicity is going to refocus you. It's going to get you where you want to be, because when you understand the high probability trend trade, it is going to teach you to read your charts. And I'm just pulling straight from the education material here. Chart reading is going to be about 90% of what you do during the day. Chart reading is going to have you identifying advantages, and it's from those advantages that you'll take a trade. Chart reading is going to allow you to open up your workspace to look at it and to understand three very key concepts. You're going to understand where the market is likely to continue, and that's going to be your point of entry for this highest probability trend trade. You're also going to understand where the market is likely to go, and this is going to help you as you develop a management plan to get the most out of each and every trade. And then finally, you're going to understand where the market is likely to stop. And these likely to stop areas are what we call termination conditions, and these are where the trend may end. They may create a bounce too large to trade, or it may completely reverse the market, guys. But these termination conditions, these areas where the market is likely to stop, this is your focus for the highest probability trend trade, for the absolute best of the best, because this trend trade and the rules that we teach, when they happen after a reversal in the market that comes from a Fibonacci area, high probability trend trades that happen after a termination condition, guys. This is a trade that typically wins 70 to 80% of the time. This is our focus for the first hour every day, because this is a plan that gives you the ability to be successful, right? And develop confidence from that success, to win more than you lose, to focus on the best of the best, to develop your patience. But guys, the reality is this high probability trend trade that we talk about is a trade that can allow you to make money while you learn to read the software, while you grow with the software, if you only focus on keeping it simple. So that's exactly what we're going to do today. We're going to focus on this highest probability trend trade for the first hour. Your goal as a brand new user, as someone brand new into the room, someone learning the software, someone trying to get the most out of what we do here, post your trades in class, guys. This classroom is designed to be interactive. It's designed to be a conversation. If there's something on your mind, post it in the room. It doesn't even have to be a trade. If you're curious about a concept, if you're curious about an entry, an area, take a picture, put it in the room, but get in the habit of posting pictures in the room and getting feedback on everything that you see and everything that you do. Guys, I've had children and I've been married for 25 years. I'm as patient as they come. I want to see everything that you're doing so that I can give you feedback. And then use the spreadsheet that Nexgen provided you as well. It's in your Nexgen Study Picks folder. Guys, this spreadsheet is a trade journal. And you know, even the CME says, don't forget to keep a trade journal. So your spreadsheet's going to do two things for you. The first thing it's going to do is it's going to let you track every trade that you take. Every time you pull the trigger on simulator, you're going to put it in the spreadsheet and you're going to talk about what you saw, what you did. You're going to talk about the results. But what it's really going to do more than anything is you're going to begin to recognize these patterns in the market that are working for you, that are bringing you success, that are making your equity positive, right? But you're also going to recognize patterns that aren't working. Maybe you're breaking rules. Maybe you're emotionally jumping in or jumping out. And what's going to happen is every time you go back and you look at these trades the next day, it's going to create a platform for the next day. Yesterday I made this mistake. Today I'm committed to not make that mistake. Yesterday, every time I did this, it turned out that I won the trade. I'm going to focus on repeating that process. And if you do a little study every morning of this spreadsheet, the trades that you took, it is going to accelerate your learning and it's going to set you up for success for the next day. And then the second page of the spreadsheet is your favorite looks section, guys. And this is really what you're doing is you're taking pictures of the rules being met, of that high probability trend trade rules being met. And this green section is nothing but entries. And in my spreadsheet, I have about 200 and, oh my goodness, 260-ish pictures of rules-based entries, guys. They are pictures from you guys in the room. They're pictures of my own trading. They're pictures from the manual. They're pictures from study. And I just put a copy of my spreadsheet in the room for you. If you looked at your brand new spreadsheet and you're like, man, there's about 65 of these pictures, steal mine. Take all these pictures, go through, click them, and really get an idea of what it is that you're looking for. So post your trades, use the checklist, and then my job is to teach you how to read your indicators, guys, and I'm going to give you everything in my arsenal to make it easy for you. You need to learn the trigger line and the Fibonacci rules for when it's okay to trade, and the idea is that you're not practicing the wrong trades, that you're not practicing breaking the rules, right? Because you want that muscle memory that's going to bring success. And you're not going to know if you're following the rules in the beginning. How could you? You're brand new. That's where I come in. That's where I'm going to give you feedback on everything. I'm going to help you understand what went right, what went wrong, what you can do better. And we're going to work together, guys, literally side by side, getting you to where you want to be. You're going to simulate, and we're going to simplify. There's that word again, simplicity. Don't make it harder than it needs to be. We're going to focus on the looks that we'll commit to, that high probability trend trade. And you're going to, through repetition, learn these looks so that they become easy. I can tell you, if you take 25 minutes of your life and you click on these pictures, you're going to begin to see patterns, right? You're making it easy. Recognition comes through repetition. Before the next day, you can use market replay. You can go back and you can retrade the day. You can fix your mistakes. You can pause market replay and verify that your rules are being met before you take a trade. And market replay is going to show you the potential of the methodology. It's going to show you the potential of your own trading each and every day. Take a lot of pictures and repeat this process, guys. That's the goal. Your participation in your own education is going to move you forward. I don't know how else to say that. So let's focus on the high probability trend trade. Let's get in and let's learn how to take a trade, how to recognize the rules being met for a trade that typically wins 70 to 80% of the time, for a trade that gives you a statistical advantage. It's only 3 rules. And these 3 rules provide 3 advantages. The advantage of momentum. It's kind of split, Paul, 50-50. I think Gary was nice enough to throw that market analyzer up for us this morning. So crude oil, guys, and what Paul's asking is, did they roll the contract every day or every month on the 15th? Crude oil rolls. It rolls monthly. Gary went through and he did a market analyzer. He's looking at the August and the September contracts. You can see that the prices are different. Mine isn't rolled yet because the volume is still on the 8 contract. Tomorrow that will probably swap. But guys, when it's split like this, when it's thin on 2 different markets, be careful. It doesn't flow quite as well as it usually did. Nice job, Gary. It's funny because I did it and I looked at your first picture this morning. I thought, oh, Gary just made my life easier. Thank you for that. So guys, 3 rules. That's it. Just 3. We're not going to make them wordy. We're not going to add to them. We're not going to go, well, 3 rules unless. We're just going to say 3 rules. 3 rules provide 3 advantages. And the recipe for a trade are those 3 advantages put together. A trade is nothing more than momentum, a clear path, and an entry area. And we're going to be able to identify all three, and you're going to be able to identify them almost instantaneous within the first week. We're going to keep those three rules on only 2 charts. You may, as you grow with the software, add charts to what you're doing, a little more information when you can take the information from the basic approach. But we're going to use 2 charts initially, and we're going to use a large chart, and this is going to be our focus. Your large chart is going to dictate direction, it's going to provide you momentum, and it's going to identify areas. Guys, all of this happens on one bar on a large chart. It's a quick glance, and it's a broad stroke of the brush. It's showing you the general temperature of the market, the overall opinion of the market. Rules 1 and 2, your first 2 advantages come off of this large chart. Before you ever turn your eyes to your next chart, you will have the advantage of momentum through rule number 1, and you will have the advantage of a clear path through rule number 2. When these rules are in place, when they're met, when they're true, then we're going to turn our attention to the second chart. And the second chart is a smaller chart. It's a faster chart. It's a refinement chart. We're going to take that broad stroke of the brush provided by the large chart, and we are going to focus it down, laser focus it to that spot where the market is likely to continue. And that's going to be your rule number 3. And rule number 3 is going to give you that best of the best entry, that entry that allows you to reduce your risk, that allows you to maximize your profit potential, that gets you in at the spot where the market is most likely to continue. So guys, 2 charts, and I'm going to give you these pictures, especially if you're brand new. So Rakesh, feel free to steal these. You can use the little download button, or you can just click and drag them straight over to your desktop. We're going to let it be simple in the beginning, guys. And those of you that are coming back, we're going to let it be simple again. 3 rules on 2 charts, and 3 rules provide 3 very distinct advantages. And the first rule says that your large chart needs strong triggers. I'm going to go back to the tutorial section. I'm going to go to the T3 trigger lines. And we're going to talk about the idea of momentum. But first we're going to talk about trend. Large chart dictates the trend, guys. And it's really pretty easy. If the background on your large chart is green, we're in an uptrend. And if you're in an uptrend, you're only looking for rules to be met for high probability trend trades long, guys. You're focused on trading with the trend. If the background is red, you're in a downtrend, only focused on trading with that trend, looking for rules to be met for high probability trend trade short. And what you're going to find is throughout the day, that trend, it will change. It'll go from up to down to up. And if you just commit to embracing that trend initially, guys, it's going to create an awful lot of advantages for you. And what you're going to find is that if you stick with that trend, it's going to eliminate an awful lot of mistakes. So I'm going to share this picture as well. This is your little visual reminder, guys. The trend is your friend. Once you're with that trend, rule number 1 says that we must have strong trigger lines. And strong trigger lines are very easy to recognize. Strong trigger lines are going to be as easy as the trend, right? It's going to take you about 8 seconds of study to recognize it. When your small trigger lines, these solid lines, break above the large trigger lines, these dashed lines, and space is created between the two. And this is key, guys. The space between the small and the large, like a pair of scissors, open, ready to cut. This look right here is what we call strong trigger lines. And when there's that separation between the two, the odds are favorable for the market to continue in the trend. The first advantage that you give yourself is odds favorable momentum. In a downtrend, the small's below the large are wide, they're angled in the direction of the trend. And once again, it's that space that's created between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. And guys, this odds favorable momentum, this OFM, right? You're going to see it as an acronym in the room a lot. This is the most favorable look in an uptrend to buying Fibonacci support on that smaller, faster chart for continuation up, or in a downtrend for selling Fibonacci resistance for that continuation with that odds favorable momentum. And it is the first rule, and really that advantage of momentum is going to carry you through mistakes that you may make as a new user, because when you have this much momentum, when the market is this strong, it's like a semi driving down the highway at 110 miles an hour. It's going to take some time to stop it. So we're going to look for that first advantage, guys. It's going to come from the point where the smalls separate until they return, and you're going to look for these areas for potential trades on the inside. So guys, I'm going to ask you real quick, and I'm just going to look at this one. I'm going to take everything off of my NASDAQ chart except for my trigger lines, and I want to show you how simple this first idea can be. When there is separation between the small and the large in a downtrend, this is when the market is most likely to continue in the direction of the trend. This is when it's most favorable to sell a pullback to Fibonacci resistance, and that's what these tails on your large chart represent. It's that pullback on a smaller chart, that refinement. It looks like a tail or a wick. And we can do this again, and we can do this all day. And what you're doing when you do this is you're teaching yourself to study. As the small begin to separate away from the large, as everything is angled up, circle a tail. And if we pull back this way, there's still that little bit of separation. You're going to see tails, and just go through. Is everybody comfortable with this? Brand new, Rakesh, what do you think? Pretty easy first rule, right? Smalls outside, separation, odds are favorable. Rule number one is met, guys. The equation has begun. Going to be a quiet class today. That's all right. Things that you're going to realize is that odds favorable momentum doesn't happen all the time. Sometimes you're going to have what we call anything can happen triggers. When the small triggers return inside of the large triggers, this is a weakening of the large triggers. This is a situation where anything can happen up or down. So you're going to see those annotated as anything can happen, or ACH. And what you're doing is you're reminding yourself that that advantage of momentum isn't present. Anything can happen triggers very often is a precursor to a reversal. The market begins to lose momentum. They probably runs into a Fibonacci area, ultimately reverses, but then provides you that odds favorable momentum, gives you that best of the best look. There's one of those potential pullbacks, and the market continues up, guys. So from anything can happen, reversal, odds favorable, take that trade right up until you lose the advantage. Market reverses, provides you odds favorable. It's going to happen throughout the day. You just have to be a little patient in those transition areas, because sometimes you're going to have weak triggers. Sometimes your small and large won't agree. Sometimes your small and large won't agree with the trend. And this is when you guys can avoid getting beat up, getting chewed up in those consolidating markets, because rule number one's not in place, which means that you're not looking for a trade, that you're not getting caught up in these situations where buyers and sellers are duking it out. We're sitting on the sidelines, letting them figure it out, and waiting for that advantage of momentum once again, guys. So I'm gonna give you this picture in the room. This is your first job, brand new users. Identify the trend, and then make sure that there's odds favorable momentum. Make sure that you're giving yourself that advantage, embracing the idea that momentum sets the pace for everything that you do. And then once you have momentum, we're going to make sure that we have a clear path. We're going to take a look and make sure that no termination conditions are present, no areas that are likely to stop the market. And termination conditions really become a pretty simple equation of, it's a comparison. Sorry, I'm going to put my fibs back on because we're going to go back and talk about it. It's going to be a comparison of those same T3 trigger lines that give us momentum, and we're going to compare it to an area on the large chart. And those areas can be Fibonacci resistance, it can be Fibonacci support, it can be yellow one-to-ones, divergence highs, and divergence lows. And I noticed that John Novak just put a little pre-high volume area picture in there. Guys, remember, we're focused on the high probability trend trade initially, that best of the best, learning to read your indicators. And what John is showing you is an amazing opportunity to take these termination conditions, to embrace the reversal, and find an earlier entry than the trend trade. But it's the skill set that you learn from this high probability trend trade, the ability to read your indicators that's going to set you up for it. And we'll talk about that HVA later today because I think it's a very powerful trade. But first, we have to be able to identify termination conditions. And these are the areas that they can happen at. And let's go through that equation real quick. Let's go through that recipe for success, identifying areas likely to stop the market. And we're going to go to the next section, Fibonacci tops, aka termination areas, reverse market. Those areas may reverse the market if this little recipe is true. The first thing that happens is price reaches the area. These dynamic Renko bars, these red bars are trending down, the market is down, the momentum is favorable, and then it reaches Fibonacci support. Well, when those dynamic Renko bars reach the area, price reaches the area, all you have to do is ask yourself is where are the trigger lines? If they remain above support, this is an area that may reverse the market. It may stop the market. It may create a bounce that's untradeable. But this is removing the clear path. This is letting you know to sit on your hands, to pause for a second because rule number 2 isn't met. Your rules are going to insist on a clear path. They're going to insist on room to the target. The path is clear when both the small and the large triggers get to the other side of whatever area they had reached. So let me take a picture real quick. If price reaches resistance and absolutely no trigger lines break through the area, this is your opportunity to sit on your hand and not trade into an area that may create a bounce, that may reverse the market, that may stop things. Your clear path has been taken away. When both the small and the large break through resistance, you'll see that it begins to act as support. The area is now broken. The path is clear. You'll notice that there's odds favorable momentum. And there's one of those tails. There's one of those potential entries on that smaller, faster chart. So I'm going to drop this in the room, guys, and I'm going to ask real quick, give me a little feedback here. Is everybody comfortable with the idea of how to identify a termination condition? It's really a two-part process. It's going to take a little bit of practice. But when we're looking at termination conditions at the high, one of those areas is divergence highs, right? This magenta line. On its own, it's just a pivot. But when price reaches that magenta line and the trigger lines remain below, we now have a termination condition. This market may reverse. It may bounce. Good morning, Bobby T. It may create an untradeable situation. So we're just going to sit on our hands at the moment. If this termination creates a full reversal, we're going to call it a good top. We're going to call it a strong top. And a termination that creates a full reversal is the precursor for that highest probability trend trade that you can take. Price reaches resistance, trigger lines remain below. The recipe's pretty simple. No more long trades, no clear path. And then you see it in the final slide. Price reaches those yellow 1-to-1s. It reaches resistance. Absolutely no trigger lines break through. No more trades into that area, guys. This is your giant red flag saying give it a second. Let it sort itself out. And then you see it from the other side as well. Price reaches those yellow 1-to-1s. All of the trigger lines remain below. You're sitting on your hands and you're just waiting. You're saying, let's let them figure it out. Price reacts to Fibonacci. Institutional traders react to these Fibonacci areas. You have the advantage of seeing them. You see what the people who control the market see, right? And this is going to help you so much. Price reaches yellow 1-to-1s, no trigger lines through, no longer looking for short trades. And when this termination creates a full reversal, gives you odds favorable momentum, guys, look at those tails. Look at that clear path. That's your highest probability trend trade. That's the one that's your bread and butter, that your ability to read charts comes from. That's the one that typically wins 70 to 80% of the time. Price reaches Fibonacci support. None of your trigger lines even come close to getting through. Look at the momentum, but it stops almost to the tick on Fibonacci support. This is your safeguard. And if this termination creates a full reversal, we call it a strong bottom, and that sets up the highest probability trend trade that you can take. Here we have one of those divergence low pivots, a slowdown in the market. Not a termination on its own, but when price reaches that area, the trigger lines remain above, it's now a termination condition. So guys, there's ideas of terminations from a high, terminations from a low, and that recipe is going to be consistent all day long. And you can go back to your larger chart. I put them back in, and what you're going to notice, and we'll use a couple rectangles. Whoa, that's in the wrong spot. Is you can use Fibonacci and you can see how price pulls back, how support is the precursor for this market reversing and going to the upside. Textbook termination conditions stop the market, right off support once again. And then what you'll find sometimes is you'll go from support to resistance, back to support, and then it begins to move. And guys, this is going to let you identify when it's time to just sit on your hands. Let the market do what it's going to do and wait for and embrace that idea of a clear path. Price creates a pivot with the loss of momentum. That's why we see this cyan line. But when price reaches that area, all the trigger lines remain above. Now we're at a termination condition. Now we're at an area that may reverse the market. We call this a pivot stop out of a prior divergence line condition. It's a very powerful termination condition, and when it creates a full reversal, it is a strong bottom. You'll also see them from highs. Divergence highs, price reaches it, triggers remain below. And a pivot stop out of divergence high is a very powerful termination condition, but it becomes even more powerful when it coincides with these Fibonacci areas. And again, that termination from a high that creates a full reversal, that provides odds favorable, that gives you one of those pullbacks, guys, that's your highest chance of success. This is what we're going to call a strong top. I like to show this picture to new users because it reminds us that 90% of your day is just going to be spent reading indicators, waiting for those advantages. This is why a lot of our users may have crude oil and the S&P up, or maybe NASDAQ and crude oil up, where they'll have two markets where they go back and forth so that they can divide that 90% between two and double that 10%. But price reaches resistance and all of your trigger lines remain below, and this is your safeguard. No more long trades into that area. And the market pulls all the way back to support and the trigger lines remain above. And this is where new users are like, well, how can I possibly make money if I can't go long and I can't go short and there's termination conditions everywhere? Well, 90% of what you're doing is reading your indicators, right? But ultimately, you get a pivot stop out right at resistance. The market reverses. It gives odds favorable. And there's your best chance of success right there. Same thing from a low, even with odds favorable momentum. When price smacks into these one-to-ones, the trigger lines remain above. This keeps Nexgen users safe from trading into areas that may reverse the market. When it reverses the market, large trigger lines go from red to green. Smalls get above the large. Triggers are above resistance. It begins to act as support. There's that clear path. There's that momentum. And there's one of those entries for your highest probability trend trade. Guys, do me a favor. Give me a Y in the room if you're with me. Price reaches the area, no triggers go through. Let's just sit on our hands for a second. Let's wait for a clear path. Is everybody good with that? Rakesh, I know it's day one. It's a lot of information. You guys are good? Awesome. Guys, you have no idea how safe this is going to keep you. Embrace the idea that these things can turn markets. Awesome. Sometimes the market's going to turn from nowhere, guys. Fibs are amazing. But there's going to be times where people with an awful lot of money in their pocket say, you know what, I want it to go the other way. And you're going to see these turns, maybe with a clear path, even with odds favorable momentum and a clear path. And this final termination condition, you're going to recognize on your smaller, faster chart. This is the only termination condition that you're going to recognize on your smaller, faster chart. And it's three divergences in the same price range. Divergence is a loss of momentum. Divergence is identified when a cyan line prints off of a pivot or a magenta line prints off of a pivot. And it lets me know that momentum is not following price. When I see those three slowdowns in the same price range, it may terminate the trend. This is a smaller, faster chart telling you that that large chart might be changing direction. It becomes more powerful when your small triggers work inside of the large triggers. When you get those anything can happen triggers on a small chart and you couple it with those 3 losses of momentum, and more powerful still when the third pivot's higher than the low or lower than the high in that same area. For those of you that are new, you're going to notice a lot of people posting these screencast links in here. This is Nexgen students showing me their trades. When we're done with the rules, I'm going to go back and we're going to take a look at their trades and we're going to talk about their trades. And each of these people are going to get feedback on what it is that they're doing. But first, I want to make sure that my new users are up to speed on what I'm going to be talking about. So termination conditions, those 3 divergences, you'll see them on a small chart when your large chart may be changing, but because it's only 1 bar on a large chart that may happen in 15 to 30 on that smaller chart, it's going to let you see this as it's happening real time. So where are we at? We have the advantage of momentum, right? And we have the advantage of a clear path now. Our large chart has done its job. Our large chart has given us the first 2/3 of the equation, right? The advantage of momentum, the clear path. Everything says this direction. Everything says that there's nothing in the way. We're with the trend. We have the advantages. Guys, we're going to go to a smaller, faster chart now. We're going to go to refinement chart. And we're going to take that 1 bar of the 13.2 chart. And we're going to refine it down. We're going to let the smaller, faster chart give us our area where the market is likely to continue. You're going to be able to identify it because trades, high probability trend trades, come from lines. They come from mid bands, they come from Fibonacci support or resistance, or they come from yellow 1-to-1s. But we're going to make sure that those lines are inside of favorable large triggers. And favorable large triggers means that on your small chart, your large triggers, the smooth dashed lines, and the synthetic triggers, dashed lines as well, but you'll notice they have a little bit of an edge on them. Those are nothing more than the large triggers from your large chart. When these 2 charts are one on top of the other, when they overlap, they're going to create your best case scenario for identifying where the market is likely to continue, the best case scenario for the least amount of risk, the smallest window of opportunity for you to take a high probability trend trade. So we're going to embrace those favorable large triggers. And rule number 3, your entry rules on that smaller, faster chart are going to have you using a limit order. And I'm going to talk out rule 3 real quick. You're going to use a limit order to buy or sell a pullback, which means that when everything is going up, a pullback is a small retracement in price that's counter to the underlying trend. So if everything says up, we're going to let the market come down to us to enter that market. Or if everything says down, we're actually going to let that market reverse up to us on a smaller, faster chart to enter that trade. So when you're looking at your large chart, the trend is up, the momentum is up, the path is clear to the upside. This will be the look on your small chart. And your small chart is where we're going to refine. We're going to use that limit order to buy or sell a pullback at an area inside of those favorable large triggers. But we have to have a pullback. So right now, everything says up. The triggers are strong. I see Fibonacci support. I see a mid-band Fibonacci support in yellow 1-to-1s. And these large triggers are up, and those synthetic triggers are right there with them. And I'm waiting to create a window of opportunity. Where is that market most likely to continue? To do that, I wait for a reversal bar on the smaller chart, meaning that this is the beginning of the pullback, that tiny retracement in price that's going to give you guys your best entry. At the time of this reversal bar, we're going to create a window of opportunity. And your window of opportunity will extend for a long trade from your highest point of support inside of favorable large triggers to your lowest point of support inside of favorable large triggers. And this becomes the area where the market is most likely to continue. And this is where you're going to activate a limit order right at the top of that window, right at the highest point of support, that mid band right there inside of favorable large triggers, maybe even a tick or 2 above it. And you're going to wait, and the market's either going to come back to you or it's not. And if it does, if that little pullback makes it to the highest point of support inside of favorable large triggers, you're going to be in a long position. And here's the cool thing, is you're in a long position with the advantage of momentum. Whoops, where did it go? You are in a long position with the advantage of a clear path, and you are in a long position having used the entry area, that point where the market is most likely to continue. And you're ready to take this trade, and you're committed to this trade, guys. You've entered the market at the top of the window because of the momentum on the large chart. Let me scroll over. I take a lot of pictures, but I have a great one of the entry here. I did have a great one of the entry. You're in at the top of the window, at that point where the market is most likely to continue, getting in at Fibonacci support of that mid band, and you're long. And even though you entered at the top, in your brain, you're fully expecting that that market may go to the bottom of the window. It may stay within that window. So you may see your P&L go against you a little bit, and that's okay, that's normal. But you have all those advantages in place. Be ready for that market to go from the top to the bottom, right? It's still in that window. But you're going to put a protective stop right outside of that window of opportunity. You're going to put a protective stop that says, if this market decides to go beyond this window, I'm going to exit the trade and I'm going to wait for the next best opportunity. Anything that wins 70% of the time, anything that wins 80% of the time is mathematically obligated to lose 20 to 30% of the time. And that's okay. Small losses are a normal part of a positive equity curve. And this is why our protective stop goes just below that window, because we can keep those losses small when the market decides not to do what the market is supposed to do. But this is a look and this is a trade that I'm committed to 100%, because this is a trade that typically wins 70 to 80% of the time. This is a trade that, because we wait for the pullback to the window of opportunity, has minimized risk. And when the market begins to go in the direction of the trade, I reduce that risk even further below the reversal bar up. Because we wait for the pullback, our profit potential is increased. There's more room to get to that next Fibonacci area. Guys, this trade is your path to success. This trade is kind of the one that's going to get you exactly where you want to be, and it's going to give you the skill set that you need to grow with the software, to see more and more every day. And now the only idea is that you need to study it, right? You need to go through, you need to be confident. You need to build that confidence with it. The rules themselves aren't difficult. They're simple, they're easy to identify. And within the first week, the average user is comfortable with what they're seeing. And then it just becomes repetition to make it easy to develop trust. And you can develop that repetition, guys, by scrolling back on your large chart, looking for your rules to be met, strong trigger lines, no termination conditions. And if you see one of those tails, circle it. What you're going to find is that when you circle these tails, they're going to line up with an area of support inside of favorable large triggers. If they do, this is a high probability trend trade. This is your absolute best of the best. This is the one that you're looking for. Take a picture of it, post it in the room, get some feedback, right? Come back in, scrolling back. We'll see NASDAQ because NASDAQ typically moves so great. I'm going to circle this tail, and this happened while we were talking about rules. Smalls are above the large are wide, they're angled in the direction of the trend. This price bar did not reach Fibonacci resistance. So now I know that I have odds favorable, and I do have a clear path. And if I scroll back, let's see what that circle looks like on a smaller, faster chart. It's a picture-perfect pullback to an area of support inside of favorable large triggers. Guys, this is your high probability trend trade. This happened 25 minutes ago. And that market didn't slow down until all the way up here, guys. That's your day in one trade. Hopefully some of you guys are showing me that picture. Gets all the way to resistance. Resistance ends up holding. The market comes down, pulls back, goes down. But on its way to resistance, did it give an opportunity? Small's breaking above the large. The path is clear. Let's circle a tail. Once again, there's a pullback directly to support right inside of those favorable large triggers, guys. This pattern repeats itself every day. If you keep it focused on simplicity, you're going to begin to recognize this pattern within the first week. I'm going to give you some tools to help. I'm going to give you a trend trade checklist. These are the rules of the trade. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? And guys, there's a link in this spreadsheet that'll take you to Nexgen's YouTube page that'll talk about tops and bottoms, recognizing termination conditions. Great study for the new users. But this checklist, I've never had anybody follow it to the letter. I've never had anybody say, yes, it's coming from a good top or bottom. I have odds favorable. There's nothing in the way. Here's my entry, and not do better than 70%. I'm going to give you another checklist. It's the exact same rules, the exact same verbiage, but I stole pictures straight from the resource materials. So you can identify the looks. So as you're beginning to study, and you're saying to yourself, do I have odds favorable momentum? Well, let me double check. Small's above the large are wide, the odds are favorable for the market to continue up. This is my look. These are anything can happen triggers. This is not my look. So you can go through and you can do that as well. And then guys, to keep you focused, to give you a plan for success in the beginning, to give you a plan that typically wins 70 to 80% of the time, to give you a plan that's going to create confidence through the memory of success. It takes less than a third of a page. And your simple plan for consistency, guys, because consistency is key. It starts with never fighting the large chart direction. There's no reason to go against the trend. Never fight the large chart triggers. Don't ever fight momentum. The odds are favorable that you're going to lose. Here's your checklist, the same one that I just provided you, defining your entries, your absolute best of the best. And as you study, you're reaffirming those great entries by putting them into your spreadsheet. Every great entry creates a management for opportunity, guys, but management takes an ability to read your charts. So the same way we're going to keep entries methodical, the same way we're going to keep it mechanical, pragmatic, we're going to let management be the exact same way for the new user. Your first 20 days is focused on entries because great entries create manageable trades. I can't say that enough. It needs to be on a coffee cup. Great entries give you the ability to manage trades. So 30 days spent on nothing but the entries. But the human brain says, well, I got to do something with that entry. So we're going to keep it mechanical in the beginning. Your initial stop will be outside of that window of opportunity, where the market shouldn't go, right? Outside of those large triggers, beyond the areas inside of them. And then it's going to be 2 ticks above or below a reversal bar in the direction of the trade. So we're going to go through this real quick, and I'm going to show you these pictures. And this mechanical approach, not only are the pictures in the trading plan that I'm working off of, but they're also in your spreadsheet. Great entries, right? Right there at the area of resistance inside of favorable large triggers. I know that it may go to the top of the window, therefore my stop goes beyond that area of resistance. At this point, there's nothing for you to do. You're either going to get stopped out, right? And that's normal. For every 10 trades you take, 2 of them are likely to lose. You don't get to pick which 2, which is why consistency and trust in the methodology is key. You're either going to get stopped out for a small loss, or the market's going to give you that reversal bar. And if it gives you the reversal bar, you're going to reduce your risk a couple ticks above that reversal bar. And once again, there's nothing for you to do. There's no need for opinions or hope or fear. It's either going to be a small loss, which can happen, or the more likely scenario, it's going to go straight to your first target. And your first target's only going to be $100, guys. And it feels like a small target, right? $100. What am I going to do with $100? Well, there's a dopamine kick that comes with that profit target reach sound that's going to come over your speakers. There is a rush of just really happiness from winning a trade, that money goes into your account, even if it's your simulated account. And you're going to move your stop to break even. And because there's money in the bank, because you have no risk, it's going to make it easier on your brain to let that next target get hit. And at this point, guys, you're going to lift your hands up, you're going to roll your chair back, and you're either going to hit that second target or it's going to get you break even. If it hits the second target at $200, remember, this is only 2 contracts. It's a $300 trade. Guys, $300. That's a great trade, right? That's a great 4 minutes of your life. But if you do this one trade once a day, it works out once a day, that's a $1,500 week, guys. That's a $6,000 month. And for those of you that can do that quick math, that's a $72,000 year. From the absolute best of the best, advantages in place, pragmatic, methodical, checklist-based entry, right? Mechanical approach to it. All you're doing. Can you show me a picture of your chart, Rakesh? Does it look like this? Hold on, let's see this. Does it look like that without the indicators but still red and green? Or is it gray? Gray, okay, so it sounds like you don't have your indicators up and running, but it does have wrinkle bars, you said. Is it, are you connected to your live data? That would be the first place that I start. And then Rakesh, I'm going to give you, all right. I'm going to, just because it's day one for you, I think, and this is a great, this is just a great for future reference too. Do me a favor, Rakesh, go over and you can say hello to Jason, our tech support. He'll get you cleared away. But I want you to try, are you kind of computer savvy? In September 23, it was good, and then it didn't work when you went to September. Okay. Do me a favor. So if you're able to make that switch, you're okay. I want you to right click and I want you to go to data series. And it's going to pull up this bar. This is NinjaTrader 7, but it's going to look very similar in NinjaTrader 8. And where it says days to load at 10, I want you to do me a favor and change that to either 9 or 11. Just take it off of that 10, because what's happening is your NinjaTrader 8, as it's collecting this brand new contract data, it's working things through, and there may be something corrupt in it. So if you change your days to load to either 9 or 11, do me a favor, do that, click apply, and let me know if that fixed your problem. That's a little trick that we can do. And maybe we can keep you out of tech support this morning and get you up and rolling. And just a reminder, guys, I'm the worst tech guy ever, but I've made enough mistakes that I've got, it worked, fantastic. I've made enough mistakes that I've gotten pretty good at fixing them. Jason's done a great job teaching me. Where was I, guys? Success through simplicity. That's your plan. I put it in the room, the simple trading plan. Keeping yourself focused on the absolute best of the best. Going back and studying the absolute best of the best, right? Waiting for those opportunities to present themselves so that you can take advantage. I'm going to go back to this one on NASDAQ. I think that's the one that we want to look at. Dun, dun, dun. You guys see the circles? Odds favorable, clear path. Strong triggers, areas of support. Initial stop is going to be outside. It's going to help keep you safe. Guys, this is the focus. And now we're going to come back in, and we are going to take a little bit of break. And when we take that break, guys, if you have a question, posted in the room. If you have a picture, posted in the room. And we're going to talk about what we see. Here we have smalls above the large, and the large are wide. They're angled in the direction of the trend. We do have odds favorable momentum, but do you notice how we've reached Fibonacci resistance and absolutely none of the trigger lines have broken through? Guys, this is directly into a termination condition, and that market just pushed right beyond that midband, right inside of those large triggers, right? The last circle was this one right here, Alex. And when we talk about entries, pullback right to support inside of favorable large triggers, that's about a 66 entry. That $100 is realized and probably stopped out break even on the second. Yep. But see how the smalls are breaking above, the large are wide, the path is clear. The entry, it's almost like a sniper right there at the mid-band, right at the bottom of the large triggers. And if that entry at 66, guys, that very methodical plan, you only had to get to 71 to make $100 to get to break even. So this is one of those trades where new users may get stopped out break even, but that's $100, right? What if you only did $100 a day and only made $500 a week and only made $2,000 a month and only had an extra $24,000 in your pocket at the end of the month or at the end of the year, guys? That's not so bad, is it? But you take that same great trade and you do it on a 10 lot, and suddenly it's $250,000 base hits. Taking the best trades, not more trades, right? Taking the absolute best of the best, managing them, and getting your success through repetition of things that provide a statistical advantage. Guys, that's going to be the focus, and that's what we're going to talk about for the rest of the day when I get back. And we'll probably talk about that high volume area trade that John Novak showed us as well. Because Nexgen's plan has been in place for 2.5 decades. Identify termination conditions. Identify using Fibonacci to identify where the market may turn, where you may lose your advantage of a clear path. And if it holds, the triggers are going to roll. Those T3 trigger lines are going to go from green to red. And your first opportunity is maybe the second trade that you learn, that high volume area trade. But if you come from a termination and everything is strong, there's your trend trade. Guys, this is your best of the best chance for success as a brand new user. And you're going to keep taking that trend trade until you reach another termination condition. And then you're going to wait and you're going to reevaluate and you're going to look for your rules to be met again. And you're going to repeat this process every day until you're always taking the correct trades. Look at the reaction that termination created. Untradeable. Next-gen users stayed safe through that entire endeavor. Over here, trigger lines don't agree. Remember we talked about that transition phase? Next-gen users can stay safe simply by following rules. So guys, I'm going to take about 5 minutes. I'm going to go reload my water real quick. This desert is dry. If you take a trade, post it in the room. For you guys that have already posted a bunch of trades, I'm going to come back and look at those. If you have a question, post it in the room. I'll make sure that you get answers. I'll see you guys in about 5 minutes. Guys, we're going to go through, I'm going to start scrolling to the top and working my way back down to the bottom. We're going to take a look at all the trades that you guys have been posting, the things that you're talking about, the questions that you have. I do have to scroll to the very top of the chart box. This is where I'm going to click on your pictures. If I miss a picture, guys, if I'm ever looking and I don't see it, let me know. Don't let me get away with not catching your pictures, because there's going to be times where it happens. I wanted to go ahead and start with Joel posted this one over the weekend. Looks like he was doing some market replay, coming through, practicing and studying. But I want to talk about how great this look is, how he was using a checklist, right? Coming through, odds favorable, momentum, the path is clear, and he takes an entry right in an area inside of favorable large triggers, and it creates a pretty effortless trade for him. And he's repeating on market replay over and over. Odds favorable momentum. It's coming from a termination condition, area inside of triggers, and once again, it creates a very easy, profitable trade for them. And it's a great way just to practice, to get better, to create that awareness. Starting off this morning, Gary was nice enough to remind us that if you are a crude oil trader, the volume is split, which means that that market may be a little hesitant to flow today. Tomorrow, it'll probably be on that 923. The volume will probably be higher. You'll be able to look and be aware. And then Gary gets us going on pictures. Notice that he has a checklist at the very top. He's looking to make sure that his rules are met. And he's really just noticing here, I like this, termination directly into a termination. So you say pull back to the mid-band inside. It's a good look, right? But it's not a high probability trend trade because that price reached resistance. Absolutely no trigger lines broke through. Guys, you don't have a clear path, nor do you have odds favorable momentum. And after the fact, you're going to see these trades, and you're going to be like, oh, I probably should have taken that trade, but you didn't because your rules aren't met, guys, and that's got to be the key. Rakesh, absolutely. So Rakesh, down here in your search bar, I want you to look for TechSmith Capture and open it up. And when you open it up, it's going to, where is my TechSmith Capture? You know what? Let me run my task manager real quick and get rid of the old one. QRS. Okay, we should be good. All right, I'm going to open up my TechSmith Capture. So Rakesh, do you have yours open? Rakesh, are you with me? All right, so cool, you got it open. So here we go. Let's go to the live chart so that we can see it. Click on that giant red button that says Capture. And the way Capture or TechSmith Capture works is if I hover over just one chart, it's only going to give me one charts of information. So the key to having that best conversation is to left click in the upper left hand corner of your chart and drag it down to the bottom right. And then when you release, it's going to get both of those charts in there. And it'll give you this option that says capture an image. And just click on it. And up comes the exact same picture that you took. And the way that we're going to have a conversation is through the text box. You're going to be able to use these different tools. Whoops, that was the wrong picture. Sorry. You're going to be able to use the different tools to have a conversation with me. You're going to be able to use arrows to point out things that you see. You're going to be able to use the shape. Maybe you have a question about something at a specific spot, but it's this call out button. where you're going to type away as much as you want to type, and you're going to tell me what you see, what you were doing, why you were doing it, how you felt, right? What got you into this trade? And then what we're going to do is we're going to have a great conversation based off of your annotations. And I'm going to be able to look at your chart, and I'm going to be able to say, yes, we did have odds favorable and there was nothing in the way. And I notice how you took the perfect entry at the area inside of favorable large triggers. And look how effortless it was to make money all the way up. Absolutely, let's do this every time. That's your path to success. So when you write on there, you can click the copy button, and the copy button will put it right on your clipboard. Come on over to the room, and you can post whatever you just did right into the room. And then you can also use that upload button, and that's going to take your picture, and it's going to give you one of those screencast addresses that you see everybody posting in there. And if you click copy on that, not only can you put it into the room, but you can also open up your spreadsheet, and you can take that screencast address and drop it right into your trade tracking sheet, right? So now I have a trend trade. This is how I felt. This is what I did. This is what happened. And you can come back and study this each day. And then also, because I like to give fish as much as I like to teach people to fish, is right there in the user guide. Once I open that up, if you're doing this later on today and practicing, here's another little tutorial to help you with it. But go ahead and use that capture software once or twice. Practice posting in the room. Give me a test picture or two to make sure that you're comfortable with it. And then if you're not, we'll go through it again and get you exactly where you want to be. Because pictures, guys, that is the most important thing that you can do. Making sure that you're sharing with me, making sure that you're telling me what you're thinking, why you're thinking it, and we'll get you to that absolute best of the best spot. And we will get there together. And then Gary, we're going to see what you did here. Gary had one of those pivot stop outs right at resistance. His small triggers are flat, but his large triggers are down. So he knows that he doesn't have odds favorable momentum yet. And he's saying, I've still got a clear path if things change. Guys, these are great pictures. And what Gary's doing is Gary's taking a minute to read his charts, and he's saying, you know what, I don't have a trade yet. I'm waiting for my rules to be met, but this is what I see. Let me reinforce it. Let me talk about it. Let me make sure that when I come back and study it, that I'm seeing things the way that I needed to be seeing it. And then here on the S&P, he sees a good top that creates a full reversal right into a termination condition. And he's saying, you know what? Not yet. Gary, it's not a double bottom because they're not in the same spot. But what it is its support holds all the way to resistance, all the way back to support. Nexgen users, there's no reason for you to get caught in a market that's consolidating. Rule number 2 is going to give you the opportunity to stay out of that nonsense. And you know, Gary, I took the exact same picture this morning when I was talking with my brother. And I said the S&P just has to work itself out. Notice how it goes from support to resistance to support to resistance. Trigger lines never break through. Guys, this is huge indecision in the market. These are buyers and sellers absolutely duking it out. And do you notice how the rules were never met? Next-gen users never got caught up in that nonsense unless they make the decision to break the rules that day, which hopefully you guys aren't doing. We're establishing the trust right now in the rules so that you never feel compelled to break those rules. And I just scrolled back, I think, 2 days worth. Give me 1 second to get right back to where I needed to be. If you're brand new to the room, this is our plan, guys. Every day we're going to talk about the rules. We're going to identify the advantages. We're going to talk about what we see, what you see. You're going to show me your trades. Gary says, check it out. Termination condition creates a full reversal. Full reversal gives odds favorable momentum. The smalls are cranking up, the large are behind it, and he's waiting for that area of support inside of favorable large triggers. This is a great pre-trade picture. It goes with his checklist, and it's just him setting himself up. And And then on crude oil, directly into termination conditions, you can see his checklist. Big red X points it out and says, nope, you're not going to trick me today, market. I'm not taking that trade into the area. And then Gary just waiting for the pullback, right? And Gary, can we talk about your pre-trade picture? Right? You love that mid-band. There's no doubt about it. You love that mid-band, but that support is inside of favorable large triggers, isn't it? The reason that we use the top of the window, guys, the reason that we're using that highest point of support is because the momentum says that the market's likely to continue up. So Gary, this is a great little pullback right to the areas inside. And I know that you wanted a mid-band, but Gary, I wanted to remind you that a mid-band is a moving average, right? A mid-band is just a moving average of price. Fibonacci is a reflection of the fear, of the greed, of the mentality of the market. It's based on thousands of pivots. They're pretty concrete. It can be. Ziba, the pullback should be inside of the large triggers when we get in, or we can get in to the area of support before the pullback and move our entry. So Ziba, I think I understand the question. Hypothetically, if there weren't a termination condition, everything says up, right? My entry is literally waiting for the market to come back to that area of support inside of favorable large triggers. So when we talk about the window of opportunity, you're waiting for the market to come to you, right? Am I reading it right? No, yeah, just let that limit order be there, right? Let that limit order, just wait for the market to come. And I think this is a good picture of it right here. You'll have a way better entry. See how everything says go? And that order is already waiting. So you've got it there, your hands are off of it. Oh, Ziba, this is going to give you better entries, less risk. It's hard to time a market and clicking it at the exact point, right? But that limit order lets you get in at the best spot. Great question. All right, who's our next picture? Let's go take a look. Jose Trades, good morning. Jose Trades has odds favorable momentum, no termination conditions, in at the area inside of favorable large triggers, and you get stopped out, right? Jose, that's a tough one. It's a good look. You had the momentum. You hadn't reached the fib. And this is, are you on 7 or 8 here? You're on 7. I love your entry. One of the things that happens, Jose, on the NASDAQ is overrun is a very real fact of life on the NASDAQ. And a lot of times, when those small triggers begin to push down a little more, I like your entry. I think it's a great entry. I think you had odds favorable, nothing in the way. It's just kind of a cost of doing business. It just wanted to get back to that support area before it bounced. And this is pretty common on NASDAQ. This will happen every now and then, right? And you're like, oops, bummer. One of the things that you'll see is it's directly off the fib here, directly off the fib here, and a big reversal bar from the outer band if you're going to use these charts as well. Maybe waiting for that market flow signal. NASDAQ is a different animal, guys, and I know that we're all excited to trade it, and I think that there's a lot of great opportunities. Make sure you simulate a little bit to get used to the nuances and the kind of the things that go on with it. And then Gary, same trade. Everything says up. There's a pullback directly to support. And you jumped out. Bailed out too soon. The smalls went below the large. Large triggers flat. You did get a market flow. And this is kind of one of those, why do we keep it methodical as we're building trust? Guys, emotions will make you do things. And this is a good example. If I'm looking at this chart, if I'm looking at the large chart, and I want everybody in the room to help me out with this, what direction are we going? We're going up, right? Does everybody see it? How's the momentum? Strong, right? Smalls outside the large, that separation. That's a look that we look for. What about termination conditions, guys? Are there any termination conditions in place there? Not so much, right? And this is the next part of what we do. So let's go back to this picture because this is going to help you manage a lot. Your large chart defines direction. Your large chart defines momentum. Your large chart defines the areas, right? It's amazing. The large chart leads the way. So Gary, write it down on a piece of paper in front of you. Large chart leads the way. What kind of chart is the entry chart? And Gary, I appreciate you posting the picture. And this is a great lesson. And I'm going to help you work through it too. What kind of chart is the entry chart? Everybody say it. Or the small chart. It's an entry chart, right? It's an entry chart because of the direction, because of the momentum, because of the areas. It's an entry chart, a smaller chart, a faster chart, a refinement chart. And guys, when everything says go on a large chart, these small triggers may turn against you because it's a smaller, faster refinement chart. It's okay. That's normal. So when you take this trade with all of these advantages and you have a perfect entry, right? Don't let that little trigger line scare you out, guys. Get in, take the trade, commit to the trade. This is trust. Man, it does, doesn't it, Mike? Everything that we do is based on advantages, right? The advantage of momentum, the advantage of direction, the advantage of a clear path, and then just refine it down to an entry, guys, and leave it alone. Trust the large chart. Until you get 3 divergences on this chart, sit on your hands. And it's hard to do. And why is it hard to do? Because on a large chart, whoops, let me show you guys something. Get back up there. On the large chart, this one bar, watch this if I put a circle on one bar. Look how many bars that entails on the small chart, right? Oh my goodness. Look at all of these potential fluctuations, all these ups, all these downs, all this movement. But what did your large chart say the whole time? The whole time your large chart said up, it said support to hold, it said momentum, which means that you've just got to kind of tape up and play hurt on that small chart. Be okay with the fluctuations, with the little ups, with the little downs, with all those things. This chart will scare you out of not believing this chart. So it takes a while. And guys, I did the exact same thing. I'm not afraid to share with you guys my pitfalls when I started because I think that they're going to help you do better things too. I was the king, Johnny Rocket. I was the king. When I first went live, when I put that pressure of real money on me, I would take 20 trades in a day, right? 20 trades and my entries were awesome. And at the end of the day, I was up 25 ticks. And I was down money because of commissions, because I was so terrified of losing. I was so focused on these little fluctuations, this P&L. Watch this, guys. Watch how many different directions this P&L will go in such a short time. If you're focusing on this, you're going to drive yourself nuts, right? If you're focusing on just the fluctuations on the small chart, you're going to make yourself sick. But if you focus on the large chart, if you focus on the advantage of momentum, if you focus on the advantage of a clear path, if you focus on the advantage of having entered at the area inside of favorable large triggers, it makes it easier to let that small chart do what it's doing. Guys, give me a Y in the room. If you saw me go from up 50 to down 90 in a matter of seconds, isn't that an absolute mind just, oh my gosh? What did the large chart say? Johnny Rocket, watch this. I'm going to make it even easier. What did the large chart say during all those fluctuations? Large chart set up. NASDAQ traders, there's those small triggers against you. But focusing on the large chart for your entries and letting something change. And guys, this wasn't a real trade. And why wasn't it a real trade? Because we're trading right into, trading right into areas and a bunch of ugliness. But these fluctuations on a small chart will eat your lunch, guys. Guys, I'm not even sure how many days back I am on this NASDAQ. It's a teaching chart. Where are you guys at? 5 or 10 days? Gary, last time we checked, you and I were on different days. You're 5. Safia, are you 5 days back? I'm 10. Here, I'll make it 5 so I'm consistent with you guys. I was 10. So I'll go back to 5 and we'll see if it lines up. But guys, the whole point of that is you guys that are getting scared, and that's okay, it's normal. But you guys that are exiting trades before it's time to exit trades, I want you to go back and I want you to remind yourself that the large chart does all the work. The large chart gives momentum and a clear path, and your small chart is nothing but an entry chart. What happens in one bar on the large chart, you're going to see fluctuations. Guys, look at all of the ups and downs. And you've got to remember to keep your focus on the advantages. Keep your focus on what got you into the trade and use that refinement chart for exactly what it is, as a refinement tool. And let me get the right template on there. Does that look more like yours now, guys? Well, I'm going to reload it real quick. Let me go find another picture. While that reloads, let's see what's next. Guys, I appreciate the pictures that you're showing today so far. Great pictures, great lessons. Everything says down, the path is clear, pull back to resistance inside of favorable large triggers. Nice trend trade, John Novak. Fits the checklist. Ziba, showing us odds favorable momentum in a clear path. Here's your entry at the top of the window. Your stop keeps you safe, and you take it right to resistance. Ziba, beautiful trade. Nicely done. Safia, same trade. What is CODB? Was that drunk fingers on a Monday morning? So same idea. Beautiful entries, right? Established risk. What got you out? Oh, you got out right down at support, cost of doing business. And that's one of those NASDAQ things. When those small triggers start coming against you really strong, yeah, it was right on a fib. And maybe this will help a little bit. This fib we expect to hold, right? And this fib we expect to hold. But Safia, you were trading directly into resistance with absolutely no trigger lines, right? Termination condition. Mm. Let's look at the elephant in the room real quick. Trend termination conditions not true. Right into resistance. Entries come from the top of the window. Absolutely. This one just wanted to go lower. But why did it want to go lower? Let me take a picture. And this is a great lesson. Do you remember when we said price reacts to Fibonacci? Safi, do you see the Fibonacci that price reacted to? Absolutely, right? So all of the buyers were banging their head on resistance right here. All of them saw it. And they said, hey, you know what? The sellers may react. And they did. They pushed it all the way back down to that area of support. I like your entry, but because of the termination condition, you got a bigger bounce. With a clear path, there's nothing for the market to bounce off of, right? And it's likely to zoom up more than... You had the advantage of seeing this fib, and you could see that's where you have to be willing. If you're going to take this trade into a termination condition, it may create a bounce. I think your entry is right? Your stop placement's appropriate. But guys, if the outside of my window of opportunity is a Fibonacci area of support right there, sometimes giving it 3 or 4 ticks to breathe. And on the NASDAQ, that's 20 bucks, right? Is 20 bucks putting it down here below that support that both charts say should hold? That may be the difference between a winner or loser. It's a good trade, Safia. You are into the termination condition. But remember, NASDAQ's a different animal. I say it all the time. NASDAQ gives a lot of opportunity, but you can't manage NASDAQ like you manage the S&P, guys. If you try to trade the NASDAQ tight, it's just going to kick your ass and run away with your money. Pardon my French. NASDAQ needs room. Man, look at that one. There it is. Mike gets in at the bottom of the window. My guess is because it's coming right off of a fib. Mike says probably going to give me a bounce. And it did. He took the lower end. When he took that lower end at support across the board that's likely to hold. Nice trade, Mike. Very well done. Mike, I want to point something out. And I'm not sure if you've realized this, but every trade that you've showed me for the last 2 weeks has looked exactly the same. And I don't think people realize just how amazing of a feat that is. Nice consistency. All right, Paul, 3 divergences, 4 divergences on the bottom. Market's railing up, odds favorable momentum. Everything says up, the path is clear. Divergence potential, who cares with that look, right? That's that pre-trade. Ziba, do you see how he's got it just waiting for the market to come back? Just above that area of support inside of favorable large triggers. Paul, I hope this one got you and paid you, because that is an absolutely beautiful look. Gary, perfect entry. Stop where the market shouldn't go. Everything says up. Very nice. You let that one marinate a little bit, right? Everything says up. Market's going up. Entry is perfect. Quick profits. And you get taken out. What did the market do after that? And you get that next divergence that pushes right down to support, right inside of favorable large triggers. 13.2 says up. Guys, the suspense is killing me. Where did this trade go? Paul, you were still in it at that point. Mike, odds favorable, clear path, perfect entry, straight down to the targets. Beautiful. Paul, I like this picture. Guys, you remember that lesson that we just talked about? Large chart leads the way, right? Termination creates a full reversal, gives odds favorable, nothing in the way. Two divergences, Paul says that's not going to take me out of this market. You're a little tight on your stop there, but willing to hold against the divergence because of the large chart. I like it. I can't wait to see what happened with this trade. Let's see where we're at. I may never know. I'm going to have to scroll back on NASDAQ to see it, huh? Termination condition. Gary, nice job. Great recognition. John Novak posting in. Hey, look, guys. Odds favorable. Everything says up. Pull back to support inside of favorable large triggers. And it goes from fib to fib. Isn't that nice? The CEO of the company, guys, the guy that wrote the software, takes the exact same trades that I teach every day. Gary, time of trade, SIG 2 divergences and smalls inside the large. So you said we're losing momentum. The areas aren't quite broken. You're willing to sit on your hands. And then M, resistance with weak triggers, pulls all the way back to support, closes the gap to the large triggers, and you take the pivot stop out right at resistance when everything rolls down. First entry doesn't work out. M, are you with me in here? First one doesn't work out. Look at the distance between the bottom of the price bar and the large triggers. Are you familiar with the gap theory, M? We talk about it every now and then. Yeah, and that's what got you here. That's your safeguard to stay out. For those of you that aren't familiar with the gap theory, I'm going to show you an example of it here. And it's not a get you into a trade as much as it's a get you from taking a trade. When price accelerates away from those large triggers on your large chart and it smacks into an area, whether it's a fib, a mid band, a 1-to-1, in this case it was right into Fibonacci support. When it reaches that area, if the large triggers stay a full bar away, if there's room for a reversal bar back to those large triggers, price is likely to close the gap back to those large triggers. You see it? Price is likely to close the gap. And M, this looks almost exactly, whoops, like that situation there, right? Price accelerates, triggers don't follow. If you sit on your hands in that moment and say, you know what, I don't know if it's going to keep going down and I don't know if it's going to keep going up, but it's probably going to close the gap to those triggers. What it does is it keeps you out of this short. And notice how at the time of this short, it's okay. But this is a great lesson for everybody. Man, when you're learning the software and you're on simulator, look at that. You're on demo. That's the perfect trade, M. Because what it does is it creates this little foundation for you, this recognition. And it says that when price reaches the area and the large triggers don't follow, do nothing. And then if it pulls all the way up to those large triggers and the smalls are below, I love this trade right here, this pivot stop out right at resistance right inside. I'm a big fan of that trade to come back and get you to the trouble spot. So thank you for posting that one. That's a great lesson. And then Geo, colors match strong bottom. I'm trying to see, there's your entry. That's a heck of a hole, Geo. That's directly into one-to-ones, or this one right here. It's directly into resistance. You get multiple divergences from that same area of resistance, and then ultimately it goes up. And for all of this headache, this entry price right here is about 4 or 5 ticks less than the one where everything agrees. Does that make sense, Gio? Fighting divergences, fighting wonkiness, all this sort of stuff. But when everything finally agrees, it creates a great opportunity. Yeah. It's the absolutely right idea. A little bit of patience keeps you from having to sweat through all that. All right, Gary, triggers up, divergence prints. Gary, divergence did not print after the trade hits. Your divergence was true right around 74.87, about 3 bars before your entry. You may not have noticed it, but that divergence was true and in place before the entry. So guys, when we talk about divergence, that loss of momentum, the way the divergence works, hey, Cedeno Hunter, is if there is divergence potential, and let me see if I can find where it's happening. If there is divergence potential, you're going to see this number fluctuate on your chart. But this divergence won't be true until the third bar. So if the potential is there it is. The potential for divergence to the downside is there, but it won't be true until this third bar starts to print in the calculations. So anytime you see divergence potential, it won't be true until that third bar. So if one of your rules says, I won't trade with divergence, well, you can still have an order waiting while that potential is present, but by the third bar, if that divergence is true, it'll give you time to cancel out. And there it is. Third bar printed, guys. Do you see it? And now the divergence is true. Now we know that there was a loss of momentum against this trade. So right as the third bar prints, that's when that divergence is going to show up. So if you know that it's a potential deal breaker for you, keep your eyes on that bar, keep your eye on that pivot, because you typically still have a couple bars before it's not a trade. All right, Paul. That's that NASDAQ one, right? White bar. If it's going, that's the spot. Right at support, right inside of the triggers, no divergence. Large chart leading the way. Everything says up. Letting it work itself out, right? Waiting for everything to agree again. Looking to continue with that trend, guys. Paul, great chart reading this morning. Daryl, everything says up. Your entry is perfect. Your stop's outside of the window. And you get paid. Nice job, Daryl. Is this the same picture? It is. Termination creates a full reversal. Momentum all day long. Right at support, right inside. Stop has to go beyond those large triggers outside of the window. Way to make money, Daryl. Good looking trade, man. A lot of advantages in place. You grab them, you get paid. Paul, entry, quick profits, everything rolls, still says up. Managed too tight by a tick. Small loser. Refocus on the best. I like the annotations. I like that you recognize, hey, maybe it was a little tight, right? Because it was a little tight, maybe I'm a little looser. Maybe I'm willing to lose an extra 20 bucks to make 1,000. Then Mike, everything says up. Yep, that's Safia's trade, right? You just got in lower. Got in lower on that one because it's bouncing off a fib. Nice job. John Novak, look at that. Magenta, divergence high, price reaches it, none of the trigger lines break, no reason to take a long. Safia, were you wondering about that? Is that actually a termination? I saw that you said that you were going to ask. And Mike M., I like the way you let it react to that fib. I think that that was solid, expecting that bounce just a little bit more. Look what that termination condition does, guys. All the way down to another termination condition. So is it going to go up or down here? Who knows for sure? The trend is down, the momentum is down, but we're right into one of those pivot stop outs, right at support. What were you wondering about the area? This one here or this one here? Take a deep breath. Guys, if you find yourself unable to read your charts for the moment, walk away for a second. Just stop looking at them. But let's go through the recipes real quick. Price reaches the divergence high. So let's write out the recipe. And this is where my head goes every time. What if it went up with 3 divergence? Is that a good bottom? So what's it take to be a good bottom, Safia? It takes a termination condition. That's the first part, right? Yeah, there's a lot happening in the area because it's a termination condition that pushed you right to a termination condition. So what you have is just this, man, there's nothing to do, right? There's nothing to do. That's the hardest thing, is to do absolutely nothing. So when you get a termination condition that pushes you all the way back to a termination condition, let me go to my NASDAQ chart. We'll talk about it live. Pivot stop out says no more longs because of weak triggers, right? And it pushes it all the way back. And the small smash through and the large don't. And now we're kind of on this 50-50 where half the triggers are above and half aren't. There was one pullback, but now we've got a couple divergences. We're going to see what happens. They're going to make a decision right here. One of the great things about being us, guys, is we don't have to guess. We don't have to hope. We don't have to worry, right? All we really have to do is wait. And we wait for these guys, the big money investors, the guys that move the market, the guys that create, and the gals that move the market, that create the momentum, that define the areas, right? They're looking at the exact same Fibonacci areas that you and I are looking at. We have the advantage, more so than probably 90% of the traders out there. We know where these guys are going to react. Your buddies without Nexgen are hoping that the market goes up right into a termination condition. You're staying safe. But these guys create the movement, the momentum, they react to the areas. Be a remora, be that little fish that lets them do everything and then just take advantage and thrive off of what they create. So when we look at a market that can't quite break the area, right? It hasn't made it through. It becomes this opportunity for us to stay safe. And just wait. It's gonna work itself out. Perfect. So Safi, if you took the first short without divergence, right? That divergence says, uh-oh, let's just hold on a second. I would get on board 100% with that trade. But then it becomes a management opportunity. And guys, a lot of trades are going to become management opportunities. And the trade that we're looking at right here is what's called a 50-50 trade. And let's go ahead and talk about that. We haven't talked about it yet today. And I'll pull up my is it broken picture. So in the beginning, brand new users, there's two scenarios. There's either no clear path, right? We've reached a termination condition. There's nothing for you to do except sit on your hands. Or there is a clear path when both the small and the large make it through the area. As a brand new user, these are your options. You either have it or you don't. A or B, black and white. There is no gray. Well, the center picture is what we call a 50-50 trade. And a 50-50 trade has absolutely nothing to do with your chances of winning. It's important that you understand that. A 50-50 trade means that your small triggers, 50% of your trigger lines, are through the area. And 50% of your trigger lines, the large trigger lines, are not through the area. 50% above, 50% below. When you have odds favorable momentum and you have this 50-50 look, this area has the potential to break. Strong triggers break things, guys. When it has the potential to break, it's still not a clear path. And that's the most important thing that I want you to get out of this 50-50 look, is that rule number 2 is not in place. It is not a clear path. You don't have the advantage of a market with absolutely nothing in the way, which means that you don't want to sacrifice momentum, especially as a new user. You don't want to sacrifice that odds favorable momentum. You don't want to see divergences, those losses of momentum. You also want to make sure that your entry area is pretty small, pretty concise, right? Because you don't want to put an awful lot of risk on a trade that might break the area or it might not. So if I have this 50-50 look, and this is what it looked like on NASDAQ just a second ago, the small triggers are through, the large triggers are not. This area has the potential to break. So on my smaller chart, no divergence, strong triggers, tiny little window of opportunity. This says, hey, go. Let's take a shot and see if this area breaks. And what's going to happen is sometimes it'll break, like it does here, where the small and larges get above, and sometimes it won't. So this is what we call a medium probability trade. This is where you're identifying areas that haven't yet broken. And John Novak, you have fibs that I don't have. But John's waiting for the breakout. John says either resistance breaks or the support breaks below, and just waiting to see. So, Safia, that divergence, if you took the first one, was a great opportunity for management. And let's take a look at your picture. Perfect entry, no divergence, right? Smalls are through. Stop keeps you safe. And then when the second divergence prints, Safia, I think this is an acceptable loss. This is great management on a medium probability trade. Do you see it? This is the trade. You get a look, you're like, oh, dag nabbit, it lost. But the reality is, Safia, is your entry was perfect, your management was spot on, and you didn't sit and hope. You said things have changed on a 50-50 trade. I'm not going to stay in this trade and hope that it works. I think this is a great look. I think you did this as well as it could be done. The management's perfect. Because this divergence wasn't true until right there. Safia, even though it's a losing trade, this is a huge victory. Because you did everything perfect. And now we have that area that had the potential to break, but it isn't breaking. There's 3 divergences in the same price range. Here's the small triggers working their way above, right? You guys see where I'm going with this? You're welcome, Safia. Great job. We're just waiting for that small trigger to get up through there. Whoops. And if it does, well, don't I have areas inside of favorable large triggers? You don't realize it, but guys, you guys are building confidence. Every time you post in this room, you're building confidence. I'm going to circle the entry first. Let's see where it lines up. Oh, right on the tail. One divergence doesn't change it. Off it goes. I bet Paul's in this trade. Termination creates a full reversal. Everything rolls. Everything agrees. There's that crude oil. Look at how price reacts. Look at all of this nonsense on the small chart when the triggers are weak. All of this nonsense when these divergence print, when the large, when the synthetic, guys. You don't have to be a part of this. You can sit out, you can wait, get those advantages. And there's your NASDAQ. The small triggers never made it through, right? No trade. That happened fast. And now there's 3 divergences in the same location. Does everyone recognize that as a termination condition? How amazing that Nexgen users didn't have to get caught up in any of this. You took one shot at the breakout. It was a perfect shot, got managed. And now we're just waiting. Let the areas clear, guys. Sit on your hands until the area is clear. Chart reading is going to get you where you want to be, right? Okay, I'm going to take a break. I'm going to stretch my legs, do a little goat yoga. If you have questions, guys, if you have comments, if there's a concept that you would like to talk about, maybe you want to talk about termination conditions. Maybe you want to look at entries. Go through that window of opportunity. Look for some bar by bar opportunities. We can scroll back. We can look for odds favorable momentum. Whatever you guys want to look at, whatever you want to talk about, I'd really like to see you guys run the last hour. Pretend like it's just me and you. If you're in here, talk to me about what you want to talk to me about. Let's get you to where you want to be. I'll be back in about 5 minutes. don't have the upper arrow fib. You don't have 1576. So Safia, are you running synthetic triggers? Mike, are you running synthetic triggers? This is a synthetic, and I know that it's synthetic because it's not extending to the right side, right? So it's possible, guys, that your settings are different than John's. John's very much like me. He goes through and he changes stuff all the time because he's always doing something. He's always in this state of study. Show me a picture of yours, Safia. Or hold on, you showed me a picture of the trade, right? So 1570, that's still up there a little bit. 15,760, which is right about here. Yep, not there. I don't know how many days back John is, though. I don't know if he's back 10, if he's back 5. I don't know if he's changed something on his. His charts look different. So if you didn't have that 56 fib, you still never had odds favorable momentum, right? You still had a pivot stop out. You're still getting lower divergences. You're still stuck on support. And then Ziba, good top, 50-50. Sure. Mike, show me a picture of your large chart. Just blow it out. Ziba, I have to ask, what made you hold 20 points and you stayed in this trade? Over $400 per contract. You stayed into this trade through divergences, through trend changes, through everything going back up. Ziba, is it possible that that may not be your best management opportunity for long-term success? Yeah, Mike, it doesn't look like you have synthetics. So on 8, let me see. That's the wrong one. If you go to data series, Mike, right-click data series. On yours, there's going to be a box that says tick data. I don't have 8 up. I'll pull 8 up real quick so that we can do this and make sure that you know exactly what you're looking at. Coming up right now. Give me just 1 second. But you're going to right-click. But Safia and Mike, even without this 56 line, there's still no trades, right? No rules met just yet? And Ziba, congratulations, you got lucky, but that's a pretty quick way to blow out accounts. All right, coming up right now. So Mike, Safia, got a NASDAQ chart coming up. If I right click and I go to data series, tick replay, if you click tick replay, it's going to print those synthetics in there. It's going to give you those other time frame lines right here. If you don't have the option for tick replay, you have it. then that's where you probably need to go on your indicators. Maybe John Novak will show his, what it is. We're getting a little technical for me at this point because I'm not a tech guy. I'll see if I can get John over in the room and show me his NASDAQ large chart settings. I'm going to send him a quick message. Cool. I sent him a message real quick, so we'll see if we can get in here. So we had 3 divergences above. We had 3 divergences below. Guys, do you see how there's nothing to do here? Can we all hurry up and wait together? Can we say I don't have to be first? I don't have to hope that this divergence highs. Well, if you don't see your entries, on your large chart it says plot, or on your small chart it says plot. So go to your large chart, Ziba, and do the same thing. Okay, so on your small chart, you have to plot them. But on your large chart, you also have to plot them. So right-click on your large chart and go through and make sure that it says, I know, but maybe remember you changed a couple. Will you check your settings for me? Just for grins? And see if maybe, because remember, your ATM strategy didn't stay either because it crashed and you didn't save in time. So maybe that happened again, possibly. And guys, there's all of John's settings for you right there, 100%. So you're going to have to take that zip file and you're going to extract it into NinjaTrader 8 chart or template chart, and you're going to have to run it through. But Ziba, that may have happened like your ATM strategy, where it just didn't get to save in time. Jared, strong uptrend. Everything says up, nothing in the way. Perfect pullback to support inside of favorable large triggers. Way to make money. Daryl, nice job. Or Jared, I'm sorry. Jared, nice job. I like it. Everything says up. Every indicator says up. You use a line inside of favorable large triggers. Making that money. Nice job. It's almost effortless when you let everything agree, guys. When every chart says go, when every chart gives a clear path, when every chart's indicators all read the same way, you're going to have this calm and you're going to be like, oh my gosh, this is good. Does everybody see that we reached a divergence high and none of the trigger lines have broken through? Even with 3 divergences on the bottom, even with a termination that creates a full reversal, we're directly into a termination condition. And no matter how much you hope and wish, a termination is a termination condition. There's no reason, right? No reason. There's a huge fight. And the cool thing is you guys don't have to get caught in it, right? Some days, I had a guy tell me this, as an older dude, long time ago. And he looked at me once and he goes, Mark, you know what? Some days you're the boot and some days you're the butt. And I always thought that was so funny. Guys, your rules are put in place to make sure that you're always the boot, right? That you always have the advantage. There's a huge fight between buyers and sellers right now, guys. And look at how accurate the software is identifying where those fights are happening. This alone is a huge advantage to any trader. I don't care what you're doing. I don't care if you're trading stocks, futures, cryptocurrencies. Having a plan that creates a statistical advantage, understanding advantages, taking them when they're present, ignoring them when they're not. That's your advantage. Look at that, straight, almost to the tick. These guys know where the fights are happening. Don't get caught up in it, guys. You don't have to. What do y'all want to talk about? You guys just want to watch the NASDAQ and see who wins? Or do you want to say, I'm not going to keep staring at this chart because I'm going to make something up if I do? Odds favorable, momentum, Zeba. Conditions not changing. Management is if then, guys. So Zeba, management is 100% if then, right? If I enter the trade, and I like thinking of it like this. If I enter the trade, then my stop is outside of the window of opportunity. So there's your first if then. And let's do it in pictures too. So for me, this helps me manage. If I take an entry, then my stop is outside the window of opportunity. If it hits that stop, I'm out of the trade. If I get a reversal bar, then I stay in the trade. If it goes to my first target, then I move to break even. If it goes to my second target, then I'm out of the trade, right? So the only thing, Zeba, what would take you out of a trade? How about reaching a termination condition? How's that for a great potential target? If I enter the trade, then my target is 45.48, okay? So I enter the trade and I take $100 and my stop is break even. And let's say hypothetically that I get in right here. And it becomes if then. I take the trade, then I take $100 and I have one contract that's break even. So Zeba, has anything changed? I don't have 3 divergences, right? So there's no small chart terminations. I haven't reached my target on the large chart, so there's no reason to exit there. And this is how focusing on your large chart and only letting 3 divergences on the small chart, this is how you stay in these moves, right? And now look how this market just made it to the termination condition from the perfect entry. And you're going to train your brain to ignore this mess, because which chart leads the way? The large chart. The large chart defines momentum. It defines areas. Does that make sense, Zeba? I stay in a trade if nothing changes. And your chart reading will tell you if something changes. So now something has changed. 45, 48 has been hit and no triggers are through, which means that that's an awesome exit, isn't it? Which means that if you got in at 42, or we'll just say 43, and you got out at 48, that's $500. Which photo, Zeba? When did you post it? Oh, the one where you held for 6 days? So Zeba, different case though, right? You don't have a clear path. You have a 50-50 trade, which means that this area hasn't broken yet, right? Which means that if divergence prints, it's a pretty good indication that this trade isn't going to work. So you just held on and hoped, right? And guys, I never compare my children because I think you're all wonderful. But here's that exact same trade, Zeba. 50-50 trade, no divergence, there's your entry. When divergence prints, that's the appropriate exit. What do your rules say? And I know you guys hate it when I do this to you because most of you don't take time to write out rules, right? Most of you don't have a written plan for a 50-50 trade. Here's a second divergence. So what does your stop placement say? Does your stop placement say, let's go through it. I'm going to hold you accountable to your plan, Ziba. Does your stop say risk over $200 per contract on a trade into an area that hasn't broken yet? What is your say for stop placement? Does it say behind the reversal bar? How do you define where you'll exit a trade, right? Oh, I know that was your trade, Safia. I was showing the management side. So what you're saying is because you think NASDAQ has a different personality, it's okay? Gosh. I'm not, Ziba, you trade any way you want to trade, right? So when do you move your initial stop? Let's not talk about anything else. Let's not talk about the trade. Let's not talk about any market or its personality. When do you move your stop? Do you move it behind a reversal bar? So let me tell you a story. You moved it 5 times. You moved it 5 times. Ziva, you may not remember, but there was a time where the S&P crashed. I don't even know how many points, but it was so many points. John Novak had a client that when that market was crashing, he went long. And he goes, well, it can't go down forever. So let's pretend it's going the other way. The market is running up. It's running up. It's running up. And you go short, right? And then you get a reason to exit and you said, well, you know what? It can't go up forever. So you move your stop. And then it doesn't again. And you move your stop again. You're like, well, it can't go up forever. It can't go up forever. But Ziba, it absolutely can. And I want you to see, and maybe this'll resonate, maybe it won't. Let me show you what you held through. Does anything about this chart suggest that the market's going down? Okay. Ziba, you do whatever you want to do, right? My job is to tell you that this looks more like a trend trade long. The smalls are above the large have turned, the termination condition is held, right? Termination creates a full reversal, gives odds favorable momentum with a clear path, no divergence on a pullback to support inside of favorable large triggers. It's a long trade. And it went right to resistance. While you should have been making money long, you did, but it changed. That's the point I'm trying to make. You went when it was going down, but it changed and you stayed short despite odds favorable momentum. You stayed short despite a termination condition creating a full reversal. You stayed short despite a pullback to support inside of favorable large triggers. And you hoped, right? And Ziba, I'm not trying to beat you up or your trade, but this is the kind of stuff where you're going to look at your account a month from now and you're going to say, and you probably don't swear because you're a wonderful human being, but that's where I would say, holy shit, I can't believe I risked $800 on a trade against momentum, against termination conditions. Even after my rules were met for a long trade, I still held on to that trade to the short side, right? So Ziba, management is just as important as entries. Your entry was perfect. Your management gives me heartburn. because I know it's not long-term success. So have an if-then and keep your opinion out of it, right? You're welcome. It's like walking in traffic and saying, well, I think these cars are going to stop. Oh, Safi, it worked for you? Good. And I just want to keep you safe. That's all I want to do. Weak triggers, no trades. And there's your NASDAQ, still trying to figure it out, right? Oh, what a pain in the butt these termination conditions are. It's working higher, but they're still caught in that range. Pretty crazy. How amazing are these fibs, guys? 15,747. Look what price is doing around it. And John Novak says he's showing a bigger time frame. This is an even higher time frame. The larger up, the smaller down. Support and mid bands are holding. It's coming from a termination. So based on this one, what do you suppose? All my trigger lines are above 49.08. The larger up, we're coming from a termination condition. The patterns are exactly the same, aren't they? Now we're just waiting for everything to agree while they fight it out. What do you think, guys? What do you want to talk about? I know that I have a whole room of people doing it perfect, right? Maybe there's something you can teach me. Guys want to talk about areas of support with all the triggers above that held all the way to the area of resistance, right? Look at this. There's another one of those channels nobody had to get caught in. And then if you waited for the breakout, there was money to be made. It's pretty cool. You see that your fibs are higher. Textbook terminations, right? So the pink line with the negative number, Rakesh, great question. Thank you. That's a synthetic. That's your 5-1 fib right there. So Rakesh, the pink line with the negative number, there's actually... Oh, don't get him excited this soon, John. I was going to hold off till Friday. And Rakesh, here's a great example of everything that you're looking at. So the pink line... The pink line is a divergence high. And what a divergence high means, Rakesh, is that when price creates a pivot, when it goes up and then down, if there is a loss of momentum, if momentum is not following price, you're going to see that negative number, you're going to see that pink line, and it becomes this opportunity for you to recognize that point in the market where the momentum was taken away. And the same thing is down here on the bottom. When this pivot forms and the negative number prints and that cyan line prints off to the side, well, this is what we call a divergence low. And this is where the market lost momentum and created a pivot as it went back up to the upside. And the way that we use them is to identify termination conditions. And NASDAQ has been putting on a show. These lines are like lines in the sand, right? And these are the areas where the market was going up and the sellers robbed them of that momentum, and it becomes a line in the sand where they it's got an opportunity for them to fight one another. So we use them as termination conditions to keep us from trading into areas that may hold. So it signifies a loss of momentum. When price reaches them, it may be a termination condition, an area where the market is likely to stop. And then Mike, you're going to have to extract. Before you can post it in there, you're going to have to extract it. Let me figure out where John put that template. I'll show you exactly. There it is. So if I click on John's link there, Mike, what it's going to do is it's going to give you this right here where it is. Ziba, have a great afternoon. Go sell some real estate, and I'll see you tomorrow morning. So Mike, it's going to give you the compressed folder first. You have to hit extract all. And then when you hit extract all, it's going to ask you to pick your spot. So I'm going to go to documents, and I'm going to go to NinjaTrader 8. And I'm going to go to, was that a workspace? That was a template. So I'm going to go to templates, and then I'm going to go to chart. So Nexgen, so NinjaTrader 8, templates, chart, and I'm going to select the folder. And then once I select the folder, I'm just going to extract. And what that's going to do is that's going to go into the folder, and it's going to put that template in there for me. And then once it's in there, I'm going to right click, and I'm going to click on templates, and I'm going to load that NASDAQ 34.5 template in there. Hopefully you were listening. Looks like the buyers won, didn't it? You're welcome. All that fight. And now the buyers took the lead. And looks like the S&P followed. And crude oil has other plans. Divergence, weak triggers, pushes all the way down to the area of support. No triggers break through. We're in a holding pattern. Rakesh, did that answer your question on the pink lines, on the cyan lines, those losses of momentum? So we see it right here. There's that loss of momentum on the pivot. And now if price comes back up and reaches 75.13, we'll ask ourselves where are the trigger lines. And you see how it reaches here and it pushes back. It's not enough to stop the market, but it is enough to create a pretty violent bounce. And that's where termination conditions ultimately keep you safe, as it keeps you from putting yourself into a trade where the market is likely to react. It's this amazing safeguard. And did everybody see that? Guys, John has the room next week. You guys get the guru himself, the guy that taught me. John Novak is going to teach the room for an entire week next week. I got some vacationing to do. He's going to talk about high probability trend trades the same way we talk about them. And then he's going to start throwing in that stuff that only John Novak can throw in, right? How to take that great foundation, and then grow from it. Absolutely, Safia. So my wife and I are celebrating 25 years. It's our anniversary on the 25th. And we're going to go to Banff, Canada. Is that how you say it? Banff? Where's Jose Trades? We're going to go up there. We've got a condo. We're going to hang out in Banff for about 4 days. And then on the way back, we're going to come down and we're going to do Glacier National Park. And we're going full-blown tourist. We're doing like the, hey, put us on a tour bus. Let's go see everything. I'm super stoked. I can't wait. Yeah, it's been on my bucket list since I was a snowboarder back in my early 20s. So I'm so excited to see it. Awesome, Rakesh. Great picture. Nice job. And that's one of the reasons why we're traveling, is so that we can see these things. And we're only 8 hours away, so we're going to make a road trip and hang out and have some fun. Nice job, Rakesh. There isn't one. There's not one in your picture, right? There are no pink lines here. There's one. That's on crude oil. But you were looking at a chart, Rakesh, and there just wasn't one. There's no divergence lines. Hey, Lil Saigon. Welcome to the room. Absolutely. But no matter what market it is, there isn't one. So there is no loss of momentum at a high on this chart. Nothing that I can see. So if I go back to NASDAQ, Rakesh, there's still no divergence. There hasn't been a divergence high on this chart since 15,762, right there. And it didn't last very long because this higher divergence pushed right through it. And now we have the smalls outside of the large, and the large are wide, and they're angled in the direction of the trend. And there's no divergence, and the smalls are outside, and there's a tiny window of opportunity. And some of you took a 50-50 trade here, right? Some of you said, because this area has the potential to break, because of the momentum, because of all of these factors, I might take a 50-50 trade here. But you're also fighting those small triggers on the NASDAQ. That's a rough look. So Rakesh, sometimes there will be divergence, sometimes there won't be divergence. From 62 to 85, not quite. The market was still working itself out there. I don't have a rule to take the entry, and unfortunately, that happens sometimes. When it finally broke above, when those triggers started rolling, I would have been hoping for this bar right here to get back to the mid-band, and it just didn't. It just didn't make it. So unfortunately, not every penny that happens in the market is ours. It just doesn't happen all the time. But that's where we finally had a clear path, right around 67. There is a gentleman that trades in this room that when the path clears and the bar breaks, he looks for these opportunities with all that momentum. And that may be something that you work your way into as you grow with the software a little bit, recognizing momentum, recognizing a clear path, and looking for an opportunity to capitalize. Guys, if you're one of those NASDAQ traders, fighting the small triggers, do you see how it bounces right off of it? Comes through. Ultimately, you get a close on the correct side. It's almost the exact same entry. That's your patience piece, NASDAQ traders. Fighting those small triggers is rarely a good idea. It can be very problematic. It all says up. The path is clear, but the momentum's not perfect, is it? Smalls are breaking above, the large are through. Small and large are both through the area. Can I right-click just above the area of support inside of favorable large triggers in case I get a pullback? What do you guys think? Small's beginning to break. Both small and large are through resistance. It's beginning to act as support. Everything says up. Small's outside of the large. If we got a reversal bar right now, from the top of the triggers to the bottom of the triggers, from the highest point of support to the lowest point of support, we've got a potential window of opportunity, don't we? Give me a Y in the room if you're with me. That's how quickly your analysis can happen once you learn how to read these charts. If it hits resistance before a pullback, well, then it's just not my trade. And this is where sometimes Ron's already in. No, his smalls are inside of the large, Paul. That's not his trade. Because he needs that same odds favorable momentum. Where is Ron? He's probably up to no good. Ron's trade looks more like that. Smalls outside of there. Guys, everything is dependent on chart reading. Everything revolves around your ability to take your information and decide whether or not the advantages are in place. And to minimize your learning curve, post your pictures, guys, every trade. Win, lose, or draw. If you win and the rules are wrong, it may be a short-term victory, but a long-term failure, right? Whether it's an entry breaking or if your management is super aggressive. How are you going to know the difference? Well, to be sure, you need that feedback, guys. You need to hear from me. I'm about the nicest guy you're ever going to meet in a teaching situation. I'm going to praise everything that you do well, and I'm going to try and nudge you in the right direction if you do something a little off base, right? But I'm here Monday through Friday from 9 a.m. to noon, every day. I'm here to give you feedback. I'm here to talk about what you see, how I see it, what you're doing, how I feel, how you feel, right? And we're going to get you where you want to be. If you're on simulator, if you're taking these trades, you're participating in class, guys, there's no risk of loss, right? This is a zero loss scenario for you. The software is free on your demo, right? The platform is free on your demo. The education is there, and I'm committed. You need someone to tell you what you're doing right or wrong when you're new, and this is part of what we do, guys. This is the magic. Feedback will get you where you want to be, so don't be afraid to participate in the class. I see a lot of people in this room that don't have much to say. Don't be shy. This is your class. Safia, everything says up, no divergence, perfect entry, money, money. Fighting those small triggers, do you see how it pushes a little bit beyond? My NASDAQ traders, you have to realize that when you're fighting small triggers, it's probably going to push lower. Stops have to be bigger. Great trade, Safia. A lot of waiting, right? But it was worth it. And then let me show you. If for some reason you get knocked out of this trade, there's your second entry when the triggers roll. Do you see how it stabs back right to the small triggers? The same way it stabs back to push it down, it stabs back to push it up. Great trade. Gary, same trade, same look, beautiful entry. How do you add to the trade? So if you're in a position already, hypothetically, Safia, you've got one contract that's running, the rules are met, and you're saying, oh my gosh, it may pull back to an area inside of favorable large triggers again, set in another limit order. Yeah, or click buy market. Order canceled. So on those big moves where you're like, everything says down, I'm staying in this trade. It's absolutely amazing. And I'm in it, and the momentum is there, and it's awesome. And I'm saying, I'm not getting out. Look at this. But you know what? If it pulls back, I'm going to add 2 contracts. Does that make sense? Cool. So here we go, guys. Odds favorable, no terminations. If we get a reversal bar, once again, I have a limit order waiting at the lowest area of resistance inside of favorable large triggers. And if I'm identifying my triggers from the top to the bottom, from the lowest point to the highest point, I'm identifying the area where the market is likely to continue. It starts on the large chart. Give me a Y if you guys are with me. Odds favorable momentum. Smalls below the larger wide, they're angled in the direction of the trend. Rule number 1 is met. Price has not reached an area, therefore, there are no termination conditions present. Rule number 2 is met. In the event that I get a reversal bar, I'm going to identify my lowest point of resistance to my highest point of resistance inside of favorable large triggers. This becomes the area where the market is most likely to continue. I still haven't gotten a reversal bar, but I've already identified it, which means that if the market pushes down a little bit, I may need to click my order and push it down a little bit as well. And then Gary says, Mark's not the only one. He's got that order waiting there as well because the rules are met, the checklist has been approved, and now it's just a waiting game. Either they come to us or they don't, guys. Either it happens or it doesn't. We're not in control of that. The only thing that we're in control of is whether or not the rules are met. Gary, that was a great pre-trade picture. And now it's just up to those small crowds, right, to give us a push. Waiting for the reversal bar. That's it. Lowest point of resistance. Highest point of resistance. Just waiting. Rakesh, do you see it? Day 1, it's hard to see that fast. By the end of day 5 or 6, guys, your analysis is going to take you 5 or 6 seconds. It really will. You'll get to the point to where you're going to identify these areas where the market is likely to continue, and you're going to be like, that's it, perfect. And from that moment that you activate the limit order until you actually get filled or it goes to the next spot, you're going to try and talk yourself into or out of 1,000 things. You're going to say things like, oh no, but there's divergence potential, or oh no, that didn't come. Can we say support is 74.15? I don't see a blue line at 74.15. My next blue line is 73.68. On my large chart. So let's go through what we're looking at. 74.45 you have, Jose? 10 days back. I don't have 45. Right on. And then Rakesh, 49. You have 49. It's a synthetic coming off of your 5-1 chart. I don't see 74.15. That's the one you have, Jose, as well. I think you and Rakesh are in cahoots there.
Order canceled.
And then Gary. Taking a second here. That's all right. I'll close it out and click it again. Everything says up. Gary's just hoping for a pullback. Missed the perfect trade. That's okay, though. There's that perfect trade again. That's the same look. That's the one, guys. This is the one that you don't want to miss. Easy win all the way up to resistance. And now it's working its way up. Not the best momentum look yet, but it's beginning to accelerate, and we'll see what happens there. Crude oil got stuck for a second. NASDAQ has reached resistance with weak triggers. S&P, not the strongest triggers ever, so we're watching it to see what happens. And then Rakesh, let's see what you got. Awesome. Did you have a question? I don't want to miss out a question. Keeps going right off that resistance inside of favorable large triggers. Oh, there it is. Maybe I didn't scroll up on your last one. I'm sorry. Yep, that's a blue support line right there at 74.15. So since we haven't reached it yet, Rakesh, we're going to call it a target. We're not going to call it a termination condition. Does that make sense? Because price hasn't reached it yet, this becomes a great spot for that market to go. And when price reaches it, then it becomes a great spot where that market may terminate, where it may bounce. It's perfect. It's a perfect read. Tony, the best thing to do is to look at the volume. So I did a market analyzer this morning. Right now we're split, which means that where you normally have 300,000 contracts being traded, Tony, you have half of that. Half of it's on 8, half of it's on 9. And honestly, the market isn't as fluid when this happens. So today it's a crapshoot. Whichever you want to trade, you could trade. But the volume is split in half. Tomorrow, it'll probably be on that 09 contract more. When I have it split like this, I typically don't trade it. Because what I really want to see, I'll pull up a NASDAQ one, is I want to see it all in one spot, right? I want to see that high volume that's not divided between two different markets. I want to make sure that it's my best of the best look. And the more volume there is, typically the more fluid, the more flowy a market trades. So on contract rollovers, I'll just sit on my hands. Tomorrow, we will be on the September contract. You're welcome. Guys, as we come up to the tail end of the day here, is there anything I can do for you guys? Anything we can talk about before we head out and let you guys go after your afternoon trading, waiting for those rules to be met? Remember, use the checklist, guys. Get in there. Police yourself a little bit. Every time you take a trade, look at it. Do I have the momentum? Do I have the clear path? Do I have all of the opportunities? Whoops. There's the checklist again. Not only the one without all of the pictures, but I also added the one with the pictures. As you're growing into being comfortable, being confident, working on that management, there's that simplified trading plan. The first one's your high probability trend trade. It has a very mechanical approach to entry, and it gives you a very mechanical approach to exit. There's that 50-50 trade, right? That first kind of medium probability trade where the area isn't completely broken. There's entry conditions, and then there's a way to manage it as well, guys. I'm giving you a plan that'll put you on the path to success, that'll keep it simple, keep it focused. The more exceptions that you create to rules, guys, the harder it becomes to be consistent. The more in the moment decisions that you make rather than working off of a plan, the harder it is to repeat, right? And you want repetition. You want repetition, execution of a plan that has been proven to give you statistical advantage. That's what we've got. We're going to do this every day, guys. We're going to stick to the path every day. You too. Safia, take care. Nice trading today. Every day you're going to post trades. Every day you're going to use your spreadsheet. Every day you're going to simulate to make sure that you practice the correct rules. Every day I'm going to reinforce the lessons of how to read your trigger lines, how to use your Fibonacci areas, how to take those advantages into an entry. We're going to simplify. We're going to focus, right? First day of medical school, guys. We're not surgeons. We're studying biology. We're creating a foundation so that one day we can be a surgeon. First day of architect school, right? We're not building buildings. We're understanding foundation so our buildings don't crumble. This is no different. You're learning a new career. Keep it simple, keep it focused, keep it simple. Notice I said simple twice. It's important. Use that market replay. Take advantage of the tools that are available. Guys, and participate in class. It's going to get you where you want to be. Been teaching this class for a couple years now, and I can tell you that the people that post the most make the most. The people that ask the most questions get to where they want to be the quickest. And the people that aren't afraid of what other people are going to think about their losing trades are the people that start to get rid of their losing trades. So embrace the path. If you need me, my email always works. Don't be afraid. It's just Mark Novak at nexgent3.com. If you go to the contact page, there's a Skype ID for me. Feel free to send me a Skype if you need to chit chat. If I'm at my computer, I'll respond. If I'm not, I won't. Make sure you tell me you're from Nexgen, though. That helps me out. And other than that, have an awesome day, guys. I'm going to go through and I'm going to look for rules to be met. I'm going to wait for odds favorable, momentum, and a clear path. And I'm going to see if I can't find one of those high probability trend trades. Have an amazing afternoon. Thank you for being here. Thank you for participating. Keep doing what you're doing. Tell your friends. I'll see you guys tomorrow morning. Take care, everybody.